If you're new to crypto and want to learn how to trade from start to finish, how to read the markets, how to place orders, when and why to trade, how to get in and out of your crypto trades for profit, and just a practical step-by-step guide to increasing your chances of making money with crypto trading, this is the video for you. This is a step-by-step video that will take you from novice to confident trader. The description includes all of the resources, links, extra information, and timestamps for each phase. I'm going to start by simply telling you what the video will provide you at the end. This is what you will learn. We will begin with an introduction to cryptocurrency. If you already know this and want to skip ahead, go ahead and do so, otherwise, check the description for all the timestamps. However, we will go over exactly what cryptocurrencies are. The most popular cryptocurrencies, what is altcoins, what is a stable coin, dollar cost average, because this is very important. How to buy Bitcoin and altcoins, then I'll go over all the crypto order types, such as what is the order book? What exactly are market and limit orders? Why do we use these while trading? After that, I'll go over the technical analysis for cryptocurrency. Tools for the trading, the best tools for cryptocurrency day trading, how to read a candlestick chart, how to make money every day as a beginner. Now just before we start, let me remind you that, if you like this type of content, and you'd like to see more, support my channel by giving this video a thumbs up below. And so you don't miss out on any future videos to come, then click on that red subscribe button and turn on the notifications and you'll get notified whenever I upload a new video. With all of that said, let's now jump straight into the tutorial so I can show you everything. Let me remind you that this is not financial advice. I'm not your financial advisor. This video is not financial advice, please just take it for education and information. All trading involves risk and a significant risk of loss. So just keep that in mind. Okay, let's get into it. The first tutorial covers the fundamentals of cryptography. What exactly are cryptocurrencies? Cryptocurrency, on the other hand, is merely a medium of exchange. They are a method of conducting a transaction digitally. They are virtual or digital currencies that are completely autonomous of government control or any central authority, such as banks. They are essentially digital currencies that can only be controlled by the user. This means you don't have to go through the bank to complete a transaction. This is a vital aspect of cryptocurrency known as decentralization. They operate on a distributed public ledger known as a blockchain, which contains a record of all transactions that have been updated and are held by currency holders. In comparison to fiat currency, which is your US dollar, euro, or any other government-backed currency, cryptocurrencies are not governed by a single government. To properly understand cryptocurrencies, we must first comprehend the concept of money or currency. So, exactly what is money? Currency, or money, first appeared as a medium of exchange 6,000 to 9,000 years ago, with people exchanging something of value. Around 3,000 years ago, societies all over the world started using gold and silver as their primary currency. Then, around 680 BC, gold and silver were melted down and turned into equal value coins, which became money. Following that, governments began issuing representative currencies, where you can deposit your gold or silver in the treasury of the government and you'll be handing out notes that are essentially gold claim checks. As a result, the paper check is said to be as good as gold because it can be converted to gold at any time. However, in August 1971, President Richard Nixon called an emergency meeting and declared that foreign countries' US dollar reserves would be unable to be converted into gold. This was the birth and development of our modern monetary system. A monetary system in which no currency is backed by gold or other valuable assets. This is known as fiat currency. It is a currency that is solely backed by government promises. The term fiat comes from Latin. This term refers to currency that is circulated through force. This means that governments and banks have complete control over money because they have the ability to print an unlimited amount of new currency without restriction. Currency all over the world has become digits in a global banking database since the advent of the digital age. Now that we have a clear knowledge of what currency is, we can talk about Bitcoin. So what is Bitcoin? Well, Bitcoin is just a digital currency, also known as a virtual currency or a cryptocurrency, that was launched in 2009. It follows the concept that was given out in a white paper that was produced by a mystery individual named Satoshi Nakamoto. Bitcoin is purely digital, which means that they are no physical bitcoins, only balance is kept on a public ledger that everyone has transparent access to. Bitcoins have a variety of advantages. Bitcoins are transferred directly from person to person via the net without going via a bank. This means that the fees are substantially lower. You can use them in every country, your account cannot be frozen, and there are no qualifications or artificial constraints. So, now that you have a better idea of what cryptocurrencies and Bitcoin are, I'd want to go through what altcoins are. So all the alternative cryptocurrencies that launched after the success of Bitcoin. Many of them are built on the basic framework provided by Bitcoin, though their use cases may be different. In short, the term altcoin describes any alternative cryptocurrency to Bitcoin, so that could even be a Litecoin, a Ripple or Ethereum or any number of other coins. So, while Bitcoin is the most well-known, as I previously indicated, there are over 10,000 different cryptocurrencies in circulation, each with its own set of advantages. Every day, new cryptocurrencies are introduced, and you never know which one will be the next Bitcoin. That's what everyone says, but you never know which one will take off and skyrocket in value. Moving over the next topic, let's take a look at stable coins. So what is a stable coin? As a result, a stable coin is a crypto version of fiat money. It is always a crypto representation of a physical asset. As a result, it does not have to be fiat money. There are also stable coins that are backed by other highly stable real assets, such as US dollar Tether and Binance US dollar, which are all pegged to the US dollar, meaning their value is the same as the US dollar. They accomplish this through a variety of distinct processes. But all you need to know is that if you have one Binance US dollar or USDT, it will be worth $1 US from now on. As a result, it's a very valuable asset for a lot of people. If you want to get out of a cryptocurrency because you believe it is too risky, you can actually get into a very solid real-world asset without having to take your money out and put it in a stable coin. Let's get started with the fundamentals of cryptocurrency trading, and if you've made it this far, make sure you're subscribed and like this video. Let's start with cryptocurrency exchanges. I would recommend Binance to any crypto trader because they are simply the biggest and baddest crypto exchange, with a vast array of products, trading, a decentralized exchange, and derivatives. Basically everything you could ever want. Binance has excellent staking support for coins, as well as excellent coin support, the lowest fees I've seen to date, and the highest liquidity. Binance is my top choice, and I would recommend that you go with it. There are numerous crypto exchanges available, such as Coinbase and KuCoin, which you can compare. All of these exchanges are detailed in the description below, take a look to see which one is best for you. So, assuming we've chosen Binance as our exchange, we'll look at the Binance interface, order types, what market and limit orders are, and then show you how to buy your first cryptocurrency. Let us get this party started. This is the page you see when you log into Binance. It is the homepage of your account. You can see in the menu bar that we have Trade, which provides us with a variety of trading options. This video will primarily focus on whether to buy or sell on the exchange. There are two types, Classic and Advanced. Margin trading is a trading method that is part of the exchange that you don't need as a beginner, so we won't go into it in this video. You can access the trading homepage here directly by clicking on Classic or Advanced. We are in the exchange now. First, let me show you the difference between Classic and Advanced. Here in the top right of the window, we have a setting button. Here you can switch between light or dark mode, as you can see, and here you can change the red and green color into traditional or fresh. We keep it fresh. You can customize the layout of the window, which is actually Classic or Advanced that was labeled in the homepage by choosing the Classic. As you can see, the chart is in the middle of the window order book on the left, and the pairs and the market trades here in the right. You can place buy or sell orders here below the chart, and you can manage your trades here below everything. And by choosing Pro or Advanced Layout, you see that the chart is on the left. And below that you can manage your trades. And in this video, we continue with the Pro layout. By the way, in Pro layout, you have more options to customize your layout. For example, you can turn off the order book and trade if you don't need them. And you can drag these windows as you can see, or resize them and make them bigger or smaller. And you can go back to the default setting, just by clicking here back to the default layout. Here above the chart you can choose the coin that you want to trade, and they are in the form of pairs. Every asset that you trade here is in a pair. You're going to give something in an exchange for receiving something else. For example, here Bitcoin to Tether is selected and this is the price. 1 Bitcoin equals something like 43,000 USDT. As you can see, here is a chart of the price of Bitcoin in relation to Tether. It is a candlestick chart, but you can change it to a line chart by clicking time. As you can see, we've returned to the candlestick chart. And here you can select your desired time frame, which can be weekly, daily, 4 hours, 1 hour, or even minutes. You can customize your favorite time frames here by clicking this button, and you can also view other market information, such as volume bars, which are already displayed on this chart. You can also search for your favorite indicators and add them to your chart. For example, I search for Bollinger Bands and, as you can see, the indicator is added here. You can also remove the indicator by clicking the delete button. Here are some tools that you can use for trading, such as this for drawing trend lines. And by simply clicking on that here, you can access some settings options as well as remove it using this button. And here's the depth graph, which is a graphical representation of the order book you're looking at. You may wonder what an order book is. When you place an order to buy or sell, you will actually buy or sell from an order on the order book, unless the order does not exist in this order book. In other words, if no one is buying or selling at the price you specified, your order will remain in this order book until someone buys or sells at your price. Actually, the pending orders you see in the order book section are pending orders, and the most recent completed orders are shown in the trade section. So here are the most recent trades that have been completed successfully. Now, let's take a look at how we place buy or sell orders in practice, as well as how we manage the orders here. In the far right corner of the window, you can buy or sell coins, and at the bottom, we can see our assets based on the pairs we've chosen, as well as how much of each coin we have available. As you can see, we have 0 Bitcoin and around 30 USDT available, and you can deposit or withdraw from your account here, with 2 tabs at the top labeled buy and sell. The pair we've chosen is Bitcoin to Tether, which means we'll buy or sell Bitcoin in exchange for Tether. So, to buy Bitcoin, you must have Tether available, and this page shows how much Tether you have to buy Bitcoin with. To sell Bitcoin, you must have Bitcoin available, which we don't have right now or here. It also shows that we don't have any Bitcoin to sell, so we return to the right app and notice that we have 3 tabs below that. It's actually 4, and the other is within a stop limit. As you can see, the types of orders that we can place are market orders, limit orders, and stop limit orders, and you must understand what they are and how they can be useful in various situations. Let us start with market order. With the help of a market order, you can quickly buy or sell at the best current available price. What exactly does this mean? This means that your buy or sell order will be executed instantly at the best available price in pending orders in the order book that have previously been placed by other traders, allowing you to buy or sell at the current market price with the help of a market order. Okay, let's try a market order and see how it goes. As I previously stated, it shows how much Tether is available for us to buy Bitcoin. Here the price is set to market because we are placing a market order, and here in this box, we enter the amounts that we want to buy, and actually it's based on your available Tether, and if you enter, for example, 100 Tether, you see that it gives the alert that the maximum amount that we can spend is this. Here also we have a slider that helps us to set the amount easily by dragging, As you can see by the help of this slider, you can easily set the amount as a percentage of your available tether, for example 25% or 50%, 80%, or you can set to maximum 100% and you will buy Bitcoin at the current price of the market with all your available tether. Set it to 50%, for example, and this means that we're going to buy BTC at the current market price with half of our available tether, and simply by clicking buy BTC, as you can see, it's done and we've bought Bitcoin. And now, as you can see in the assets, we have Bitcoin available to sell because we now have BTC. If we go to the Sell tab, you can see that we have Bitcoin available to sell. Please keep in mind that market orders are used when buying or selling your coins, and getting out of the position is more important than buying or selling it at a specific price, because slippage may result in higher fees and higher prices. If you're unfamiliar with the term slippage, it's the difference between the price you expect from a trade and the price at which the trade is actually executed. For example, if the market is highly volatile and the Bitcoin price is falling sharply, you may place a sell market order, only to discover that the price at which the order is executed is lower than you anticipated. So, market orders are only used when you are in a hurry and want to buy or sell the coin quickly, regardless of whether the price is higher or lower than what you expect. Okay, let's try a limit order and see what it is and how it can help. A limit order is not the same as a market order, which is executed quickly at the current market price. A pending order is a limit order. And, in fact, it has been placed in order for, and it will be carried out when the price reaches the level that you have specified. It's referred to as the limit price. As a result, your order will be executed when the price reaches the limit price, or better. This means that you can place a buy order lower than the current market price, or a sell order higher than the current market price. Okay, let's see it in practice. Consider that you have analyzed the chart and you think that 37,000 is a significant support level, for example, and you think that the price will fall to this level. And this price is a good opportunity to buy Bitcoin. So you can place a limit order so your buy order will be executed at your limit price or a better price. So here in this box, we enter our desired price, which is 37,000. And by clicking buy BTC, the order is successfully placed. You can see here that we have one open order and the information related to this order. Like the type, which is limit, it's a buy order, it will be executed at 37,000. For a better price. This is the amount, 0% failed. And this is how much it's worth in terms of tether. Pay attention that this 20.2 tether is deducted from your available amount of tether, and you don't have access to it anymore because it's locked in this open order and it's not a Bitcoin yet, and you can simply close this order by clicking on the cancel. Please pay attention that the limit buy order is placed below the current price. We set the limit price on 37,000, and even if on this price, our order is passed over, it will be executed in lower prices because a limit order will be executed at the limit price for a better price. In this case, you're buying the lower the better. Limit orders are not executed instantly. And they are used when you don't want to get out of your position quickly. By the help of limit orders, you can have better buying or selling prices, and traders usually place limit orders near support and resistance levels. So that's the end of limit orders. So the following step in this video is tools for trading. To begin, we'll go ahead and start with the best tools to use for day trading cryptocurrency. I'm going to show you how to read a candlestick chart and what it is. We're going to go over the fundamentals of day trading, and then I'm going to show you how to make money every day. So having the right tools is the first step to becoming a successful cryptocurrency trader. There are a few other tools that I tend to use on a daily basis that have really helped me be successful and make good trades. The first is TradingView, which is a web service and social network that provides an overview of cryptocurrency markets, prices, and charts. So, this is where we'll actually look at charts. We're going to draw some lines. We'll be analyzing the data and using it to inform our purchasing decisions, whether we're buying, selling, or trading in any way. So the first thing we're going to cover in this module is the candlestick chart, which is what you'll be looking at every single day when trading. So reading a candlestick chart is the foundation of day trading. It's the type of chart you'll see on an exchange, such as Binance, KuCoin, or pretty much any other type of exchange out there. And, while no one can predict what will happen in the market with absolute certainty, the chart gives you the best chance of a positive outcome. Next in line with the chart are a couple of different things that you'll see on the chart, which are candles and wicks. As a result, a candle will show the opening, lowest, and highest prices of a coin during the specified time period, as well as the price at which it closed. The wick or line at the top and bottom of a candle represents the lowest and highest prices at a given time. The color of the candle body indicates whether the closing price was greater than or less than the opening price, as represented by a green bar or increasing up bar, or lower than the opening price, as represented by a red bar or decreasing down bar. A green up bar indicates that the market is bullish and that it is in an uptrend, whereas a red down bar indicates that the market is bearish and that it is in a downtrend. So, now that you understand the fundamentals of a candlestick chart, it's time to set up your charts. You can read it and, more importantly, make money from it in this video. So that's it. The candlestick chart is shown here. When it comes to trading, this is going to be your bread and butter, as well as your best friend. This is ultimately what will help you make money, and it is a critical tool. Now, if you recall from earlier in the course, I stated that no one can time the market perfectly, and this is completely true. However, the candlestick chart gives you the best chance of gaining an understanding of what's going on in the market based on previous performance. As a result, this is referred to as technical analysis. So this chart is in trading view, and it's one of the tools I mentioned in previous slides that will be your best friend when trading any type of cryptocurrency. As long as my exchange of choice is open, I always have trading view open. So this chart is currently set to a 4-hour view, which means that these candles or representations are every 4 hours, so the last red one was 4 hours. The green one before it was 4 hours. The previous red one had lasted 4 hours. You can basically see what these movements have been doing and how these coins have been behaving in the last 4 hours. However, this chart does not yet provide us with all of the information that we require. We'd like to include some indicators to provide us with some additional tools in addition to this trading view candlestick chart. As a result, we can make better, more informed purchasing decisions. As a result, the free version of TradingView will only allow you to use up to 3 different types of indicators. However, that will be more than enough for all of our day trading needs. First, we'll go up here to the top left and click Indicators. And the first indicator we'll add is called Alligator Indicator. We'll search for the Alligator Indicator, which appears here. I'll go over various techniques and how to use the indicator so you can put it to use right away in your trading arsenal after watching this video. So, without further ado, let us begin. So this is how my version of the strategy works. If you are using the original alligator strategy, you would wait for all 3 lines to cross over and then take a position. This is actually the worst way of using the alligator strategy. Because if you waited for all 3 lines to cross over, you would have entered in late and missed the trend already. So instead of waiting for all 3 lines to cross over, I would instead wait for the green line to cross over the purple line. So if the green line crosses above the purple line, you take a buy position. Notice how by only waiting for the green line to cross over the purple line, it gave an earlier entry signal compared to if you waited for all 3 lines to cross over. And now for our exit strategy. So let's say you took a buy position here. So you want to close your trade once a candle closes below the purple line. If a candle closes below the purple line like this, you close your position. If you want a more in-depth explanation about the strategy, you can check out my alligator strategy video. The link will be in the description. So I just showed you the fundamentals of cryptocurrency trading that you can use right now to profit. And all I ask in return is that you spend 2 seconds liking the video and subscribing to the channel. It literally only takes 2 clicks, but it means everything to me. You can also watch some of my other videos. So, thank you for watching, and see you in the next video.